Folks, this is not looking good. It's currently about 12 on the East Coast right now, and we have all the indexes getting destroyed. We have the Russell down 2.5% to lead the losses right now. We have the NASDAQ down almost 2%. We have the Dow and the S&P each down 1.6%. And get this, guys, the VIX is down 15%. Unbelievable. So in this video, we're going to break down the markets like we always do. We're going to talk about some earnings from Home Depot and from Walmart. And, well, we're going to break down some other stocks that are moving. So if you guys find value, of course, hit that like button. Take a sip of your coffee as well. Feel free to subscribe. And don't forget to get up to 15 stocks from Moomoo, each up to $2,000 using that link down below. And you could get up to 12 stocks from Webull with any amount deposited. And, of course, guys, all those links help out the channel. I appreciate you guys. As always, let me know what stocks you get, what free stocks you get down below in the comments. And now let's dive into it. So again, markets are getting destroyed right now. It is not looking pretty at all. And a lot of this has to do with, well, the earnings from Home Depot and from Walmart. The forecast from these two companies that we're going to get into here in a couple of minutes. But first, let's take a look here at SPY, which is gapping down under a big support that we've been talking about. You guys probably know if you've been watching the channel, we're falling under $405, which you can see pretty much has held all of February, the past 3 weeks. You guys can see each time this thing has pulled down to about 404 to 405, well, we've seen some bounces. We've seen many bounces at that point, back in the beginning of February, middle of February, and we tried bouncing. Well, I guess we did bounce on Friday. We hit 404. We got up to about 407. We tried holding it this morning as well, about 404, 405. You can see pretty much all pre-market. We were holding more like 403, 404 today. And once the markets opened, well, this thing just got destroyed. It got clobbered. It fell right under 404. And now we're testing the next main support, which is at about $400, which is where my alert's at right now. That's where we held back in the end of January. Then we went on that big run from 400 to 418 on SPY. So if we do fall under 400, guys, we have a wide open gap down to right around 392-ish, which if I zoom in a little bit, you guys can see 390 to 392. That was support all throughout pretty much November, heading into December. Then we fell under 392, went all the way down to 375. So by the looks of it, guys, we are heading down to, well, again, test 400, but if that breaks, we're probably going to be going down to 392. And not to mention, look at this. This is not good. I mean, we're falling under the 180 SMA on the 4-hour here on SPY, and Triple Q is also probably doing that, right? Actually, no, not quite yet. It's not under the 180 SMA, but it is under, and that's on the 4-hour chart, by the way, but it is under the lows from last week. We're falling under a very critical support here with today's 1.8% red day. We're falling under 298, which you guys know if you've been watching the channel, that's a big level we've been talking about. 298 held pretty much all of February, and that was resistance in the end of January. So the fact that we're getting selling pressure under that point, not the best sign for the bulls, not the best sign at all. And I could see this thing going down 290, maybe even lower than that. If we pull the 4-hour chart up, we can see, unlike SPY, this is still above the 180 SMA, which is right around 290. But if that point breaks, guys, 290, 292, get ready for more selling in these markets. So the VIX, again, like I said in the intro, the VIX is up 15%. Looks like it's really starting to make a move now. Volatility is getting back into these markets, guys, which that's not the best sign. That is not the best sign. But it's not that hard. It wasn't that hard, rather, to predict, because we can see the VIX. I mean, and I mentioned this to you guys many, many times. The VIX has been, the lower end of the range has been around, 14. Well, that is the low here on the 3-year chart, but a more the better. I don't want it the better. That doesn't make sense. The better low. No, not really the better low, but what am I trying to say here? 17 to 18 really has been, the bottom end of the range here on the VIX. Well, again, it got to 14, 15 a couple times, but really it's bottomed out at about 17, 18, over the past couple months. Now we're starting to get back to the mid-20s with today's move, again, up to 15%. It's up 15% right now. So I feel like this could continue, and the VIX may have a long ways to go, especially if Triple Q, and SPY, they break those levels that we mentioned. So let's talk about these earnings, guys. We had a couple companies this morning report, really two that I want to talk about today, being Walmart and Home Depot. So let's start off with Walmart, which ended up doing EPS of $1.71. Let me see here, versus the $1.51 estimated. So they actually beat on EPS. And when it comes to revenue, they missed. Or actually, no, they beat. Home Depot missed. We'll talk about them in a second. Revenue came in for Walmart at $164 billion versus $159.76 billion estimated. So they actually beat EPS. And they beat on revenue. And they actually raised their annual dividend to $2.28, marking the 50th consecutive year of dividend increases. So I guess that makes them officially a dividend king now, which is 50 years of consecutive dividend payments and dividend growth, and dividend aristocrat is 25 years. So I guess Walmart is officially now a dividend king. So kudos to you if you own Walmart. Full disclosure, I don't, but if you do, for the dividend, you're doing pretty well. And let me see the live news tab here for the guidance very quickly, which is why the stock is coming down a bit. They now see, let's see here, full year 23 or 24 rather, Walmart comparable sales up 2 to 2.5%, excluding fuel, and they see full year adjusted EPS of $5.90 to $6.05. And let's see here, if we come up a little bit more. Overall, guys, what they're doing is they're giving out pretty much a cautious outlook, and they're saying that EPS and growth really could be slowing down. And you guys know in the holiday quarter, a lot of the growth, and Walmart said it themselves, I mean, the proof's in the pudding, came from customers mostly buying groceries, right? A lot of these grocery sale, or the grocery sales rather, increased, and we can see here growth during the holidays were led by grocery sales. The company said as shoppers bought essentials instead of gifts, and that goes to show the state of the economy, right? And we saw that with Target. A lot of people were going to Target for more of essentials. And to be honest, guys, in terms of the argument between Target and Walmart, I think Walmart, and it's not really much of an argument, Walmart's a much better business in a recession. It's cheaper. People go there for more essentials. Target's for more non-essentials, right? I mean, it's pretty obvious. You don't really go there for the most part for things that you really, really need. Sure, I mean, you do for some things for Target, but a lot of the time it's money that you don't really, you're just going to spend extra money, right, at Target, whereas Walmart, you're buying essentials, and the proof's in the pudding. A lot of people went to Walmart for groceries, and that, boosted their sales, and we'll see if that continues, but overall, it's looking like it's not going to. The guidance for them is looking pretty bleak, and the stock is up about 0.5% here. Let me see if we can see anything else. But oh, and by the way, they raised their dividend by a whopping 2%. That's really not much, considering what inflation is right now, 6.4%. But they still raised it nonetheless, and I think the stock could be a bit overvalued from a long-term perspective. We're not really going to get into that in this video. But looking at the chart, which I do want to look at very quickly here in this video, we have an inverse head and shoulders, which still is intact with today's move where it's up 0.5%, and Home Depot's actually down. We'll take a look at that in a second. But Walmart's up a little bit. 0.5%. Inverse head and shoulders looks to be still intact, and it looks like we're at a multi-week high now, and I'll set my alert at $150. If that's able to break, we might get that right shoulder to really start to move from that point. And if we go over here to Home Depot is collapsing. The stock is down 6% right now. They did EPS of $3.30 versus $3.28, which beat, but like I said a second ago, they missed on revenue, $35.83 billion versus $35.97 billion estimated, and they see full year 23 sales flat versus full year 22, which is not good. Their guidance is definitely soft here, guys, and they also raised their dividend to $2.09, which is great. That was a 10% raise, which is awesome. That's definitely outpacing at least the inflation that they're telling us, 6.4%, and they see full year 23 EPS declining, which is a reason why the stock is cratering right now, probably the main reason. They see it declining in the mid-single digits percentage versus the $16.77 that they had estimated. So we're seeing a complete free fall in Home Depot stock. It's at a multi-month low at this point. You guys can see we just broke under today, $310, which was a big support. Now it's a resistance. And if we draw out some more lines here, we're also taking out another big support, which was the high from the end of October, being about 300. We're currently slightly under that point. So Home Depot is getting clobbered right now, guys. And the truth is, we're probably going to get a relief rally. I'm not calling for that today. But once the dust settles, maybe at some point later this week, we could get a relief rally. But right now, it is just no signs of it. No signs of bulls coming in. You know, maybe this thing does go down to 290. 292. If it does, that'd be a spot where I'm definitely looking for a relief rally, but I'm not really getting too excited about it anytime soon, considering we're not getting any signs of buying pressure from the bulls. I mean, we're going to have to wait this one out and be very patient. And let's be honest, in times of recessions, it's not going to be the best for a company like Home Depot. You know, when people's home, especially when people's home values are going down, they're not going to want to actually go out there and reinvest into their homes and, do these home projects, because it's all like a psychological game, right? Home values going down, you're not going to want to, throw more money into your home when the value's declining. But when the value's going up, we saw when housing prices were going up like crazy, people were definitely going to Home Depot more and, adding to their home or, renovating it or adding another, room or whatever. You know what I mean, right? Doing these house projects. We're going to be seeing less of that, in my personal opinion. And of course, I'd love to know what you guys think in the comments down below. So markets are not doing well at all right now. There's literally only 3 stocks, and one of them is not even a stock, that are green right now. We have AMC up 12%, SQQQ, which is an ETF, inverse leverage ETF, that's up, and we have Meta up a little bit, up 0.5%, not much. Other than that, we have stocks getting destroyed out there. JD, Roblox, Palantir, Tesla's down, which we will talk about Tesla more in my next video, so make sure you guys subscribe. This one is looking like it wants to go under $200 a share. So with that being said, I'm going to wrap the video up. If you enjoyed it, make sure to hit the like button. Feel free to subscribe and check out my second channel, Stas Talks Money. If you guys haven't done so already, go to YouTube, type that in, or go to the description box, click that link. Make sure to go subscribe to Stas Talks Money. And if you haven't gotten your free stocks yet from Moomoo and from Webull, down below, get your free money. Check out the Patreon as well. And with that being said, I'll catch you guys later. Peace out.